Earlier today, we got some mixed data from the United States that have caused some market volatility ahead of Friday's main event, which is none other than the PCE inflation update. Before we get into all of that, as always, please read carefully through the risk warning and the disclaimers, and then we will get started. Once again, please read through the risk warning and the disclaimers carefully. And also note that anything discussed during this session does not constitute investment advice and should not be construed as such. Okay, let's get the ball rolling. We have quite a few things to catch up on. We have Euro USD on our sites, but let's give a recap and deal a little bit with the tech earnings. So sentiment soured due to renewed fears over the financial system after the massive deposit outflows of First Republic, on which we commented on Tuesday. This sparked some shifts around the Fed expectations. But then again, we had new data now that again changed things up a little bit. Before we get into the dollar and the euro and these data points, let's quickly go over the big tech earnings, which help offset the negative impact of the banking fears. You can find more in-depth analysis on FXCM's market analysis websites of your respective regions around the tech earnings. Quickly to mention that Microsoft knocked it out of the park with strong top and bottom lines and robust revenue guidance. Alphabet's Google Cloud turned profitable, while YouTube ads disappointed once again, and search grew but only marginally, highlighting the competition it faces from Microsoft and generative AI, an area where the two face off, but Microsoft seems to have the first mover advantage. Meta Platforms followed overnight, returned to revenue growth, expects further rising in the second quarter. Its daily active users for all the apps, Instagram, Messenger, WhatsApp, Facebook, crossed above the 3 billion threshold, average users, and that ad impression, advertisement impressions also increased year over year. These were overall strong results. Meta was rising more than 10% in pre-market. Microsoft gained around 7-8% yesterday, so this helped lift Nasdaq, and we will talk about that later on. Let's start though with Euro USD. Cleansed fresh 2023 highs yesterday. This is it here. As First Republic caused risk aversion, but also reinforced expectation around first cuts, cuts, but and this harmed the US dollar. Today, however, we got jobless claims dropping, which points to more hikes, and GDP came in much lower, which should reinforce fears for a recession at 1.1%. It's preliminary, the first reading, but there were some components there that point to strong demand, thus also pointing to let's say sustained restrictive stance by the Fed, and that's why we see Euro USD actually dropping now. The outlook in any case has not changed much. The road to 112.33, 112.47 is open, but the data will determine that. We got PCE tomorrow, we also got the Fed next week and the ECB, so big week ahead. On the other hand, the RSI has diverged. We can see that did not follow price action higher, and that creates scope for further losses towards the exponential moving average, the 200 period EMA at around 1.09, but we have talked about again. But it seems well protected after that. You can see here a series of supports after the EMA 200. That's pretty much it. Again, data dependent here. We need to see because we expect big events starting tomorrow. Now, let's go to the Australian dollar versus the greenback, the US dollar. The pair extended its losses on Wednesday after Australian CPI inflation decelerated in the first quarter, 7% year over year, the smallest increase, still a big number, but it was the smallest increase in nearly a year and significantly lower compared to the fourth quarter. Now, the RBA had, the Reserve Bank of Australia had paused its rate cycle at the start of the month, but have kept the door firmly open to further tightening. These results, though, I think give policymakers room to stay on the sidelines at the upcoming meeting, which is right around the corner next week on Tuesday. The Australian dollar had rejected the 38% Fibonacci of the 2023 high-low drop multiple times, as you can see over here. And there is increased risk for new 2023 lows, which is located at 0.6563. But once again, we need to see what the outcome of the upcoming significant events will be. Try to find support today, the Aussie, and we wouldn't be surprised from a recovery effort. But you can see how we have the EMA 200 and the lower border of the daily Ichimoku cloud, a thick daily Ichimoku cloud looming large, and a strong catalyst would be needed for a bridge into those areas. So yeah, it looks tough. And as we're already 2 minutes into the US session, let's go to the Nasdaq. You can see here the tech-heavy index remains in consolidation mode around having stepped into a bull market, but there it faces headwinds. And on the one hand, we had the banking fears weighing, but on the other hand, we had the tech earnings that we mentioned already helping it. And if we shift onto the hourly chart, you can see here how these factors played out. We had First Republic Bank decline, then Alphabet and Microsoft pulled it higher, and then Meta once again helps it today, gaining around 0.5%. Now it's having a mixed week, clearly waiting for a catalyst as markets contemplate these diverging, these competing, let's say, factors. It had breached the 200 period EMA, and this creates risk for a broader drop towards the broader 12,400 region around here. But again, you can see that it seems well protected on the downside. However, as I said, it gets another lift today. It catches a bit and defends the 200-period EMA and has shown resilience to the recent headwinds. Above the EMA 200, bulls are in control with the ability to set new 2023 highs, currently located at 12,238, but don't inspire confidence for a bigger advance that would challenge 13,724. Again, the outlook here will be is a bit mixed because we expect big events, prospects of economic slowdown, elevated inflation, and a higher for longer, let's say, stance by the Fed weighing, but the index has shown resilience, and we need to see what the Fed will do, and more importantly, perhaps what it will signal for the future. Now that's it from the technical outlook. What we have ahead us is US March PCE inflation on Friday had moderated to 4.6%, the core reading, and 5% the headline in the previous month. CPI earlier this month had shown a sharp deceleration in headline, but an uptick in core, a recent, a familiar theme we've been seeing recently. Now we also have the Bank of Japan on Friday, earlier on Friday. It is the first decision under new governor, Mr. Ueda, and we also expect the updated projections. The new governor has not shown any intentions to shake things up, but expectations for policy normalization are building. And the bank has surprised before, but it looks like, based on what we have seen and heard, to maintain the status quo. But again, for guidance may be also important here. There is a level of uncertainty given that this is the first decision under the new governor. We also expect gross domestic preliminary GDP by Euro area and Germany, and we also expect more tech earnings, mainly Amazon, due on Thursday after US close. As with the rest of the tech sector, the e-commerce giant had a bad 2022, managed to turn profits in Q4 after 3 losing quarters, but just barely so. So again, an interesting backdrop here for Amazon. And of course, next week we have a central bank bonanza with the Reserve Bank of Australia on Tuesday, followed then in the next days by the US Fed and the ECB, all of which are pivotal decisions that can determine the trajectory of the relevant assets. That's pretty much it from me. We'll talk again on Tuesday, our usual time, 13:20 GMT, 10 minutes before Wall Street opens. Thank you for joining me today.